Here with this week's hottest stories in the investment world, this is Zacks Friday Finish Line.
Hello and welcome to the Zacks Friday Finish Line. I'm Ryan McQueeney, Associate Stock Strategist here at Zacks, along with one of our editors, Maddy Johnson.
Hello. Today is a special edition of the Friday Finish Line as we will be joined by Eric Ervin to discuss the ever-trendy world of cryptocurrencies and blockchain technology. Eric is the founder and CEO of Reality Shares, a firm known for ETF industry innovation, and he has a unique perspective on how investors can add exposure to blockchain right now.
That's because Reality Shares recently launched the NASDAQ NextGen Economy ETF, which trades under the ticker BLCN. The BLCN ETF seeks to identify blockchain leaders by using a unique model designed by Reality Shares to determine which companies are actively using this technology right now.
We chatted with Eric about blockchain and the many interesting applications of the technology, as well as what investors should know as they develop investing strategies in this space. We hope you enjoy.
So blockchain has become one of the trendiest words in the investing world over the past year or so. But at the end of the day, it is a complicated mathematical technology that can be difficult for the everyday investor to fully understand. Could you take a shot at defining blockchain with this type of listener in mind?
Yeah, and it's something. First, maybe we could say that there is a difference between blockchain and cryptocurrency. Blockchain think of blockchain like a technology, and then cryptocurrency was an application that was built on that technology. So Bitcoin was an app built based on that technology. But it's best to think of it no different than what we all know is a database, and just think about a massive spreadsheet. And the key difference is everyone has access to that spreadsheet in the world, and there's billions of copies of that same spreadsheet, and that spreadsheet is a record of ownership of an asset. So, up until this point in time, we've really moved our whole lives into the digital world, except for records of ownership, because if it was digital, then it could be copied, and you couldn't verify that I owned that dollar versus you owning that dollar, because there could be multiple copies of it. But if we all have access to the same ledger or the same spreadsheet, and we can see, hey, it's Eric's dollar because he got it from Ryan, as an example, then they all know when Ryan tries to spend that dollar again, it's an invalid transaction. And that was really the problem that was solved with the first kind of Bitcoin blockchain, is you could now own assets and make sure that they couldn't ever be double spent in any form, and cryptography allows for that. So the math behind it is a little bit more complicated, but really everything else is just, it's this database that everyone has access to, everyone can see the ledger. They don't necessarily see Eric Ervin owns this asset. What they do is they see my account number, or think about it almost like a Swiss bank account, which represents me on the blockchain. But they all know that I own that asset, and if I were to spend that asset or to send it to someone else, then they would own it, and I would no longer own it.
Yeah, so kind of piggybacking off of what you said, many people's first introduction to blockchain technology was through cryptocurrencies, which have proven to be exciting but very volatile assets recently. Crypto optimists are passionate about the potential for these digital coins to shake up the financial industry, but blockchain advocates tend to say that this is just the tip of the iceberg. So what are some applications of blockchain tech that our listeners might not have even heard of yet?
Oh, yeah, and it's huge. It's like that kind of the internet did for information, where it just completely decentralized information and everyone had access to information at their fingertips. And kind of you can imagine in 1995 not even fathoming something like Twitter or Facebook or some of the different technologies that were built on that technology. Same thing here. So where we have this now blockchain technology, first killer app was Bitcoin. And then you have all of these other things because you're taking that central figure out of the equation. So the the bank, for example, if I have an asset, I no longer need to store it at the bank. I can store it right there on the blockchain. And if I want to send that asset to someone else, I can just do that, and they don't need a bank either. And there's a significant amount of friction in that system, in the banking system in general. But to move it out into, say, machine-to-machine payments. So, for example, we're going to have autonomous vehicles here pretty quick, and they're going to be out there Ubering around other people while you're at work, and you can be paid with your car out driving people around, and your car can go then to a charging station and get paid. Micropayments are available now because of blockchain technology, because you don't have friction in the system, so you can pay 0.0001 cent to someone for reading their article on the internet, as an example, versus having to have a full annual subscription to a publication in order to read one article. That's no longer necessary.
Interesting. Those two I had not heard of. So in terms of applications we hadn't heard of yet, those definitely check my boxes. So moving on here, we understand that Reality Shares has attempted to help investors easily find blockchain-focused company through its NextGen Economy ETF, which trades under the ticker BLCN. This fund identifies blockchain leaders by looking at specific companies' blockchain score. Can you explain what factors influence this score?
Yeah, like any new technology, there's going to be, we view this as kind of a 10 to 15-year cycle, and so you want to be early, like anything, and take advantage of those companies that are innovating. But it's not easy. IBM, for example, is a major, major player in the blockchain space, but it's also a huge company, and they have a lot of other initiatives. So how much is blockchain really going to move that business? So what we did was we set out to quantify the company's what we call blockchain score, or think about it like what kind of economic impact are they going to have from blockchain success. And we rank them in 7 different categories, every publicly traded company, from how many patents they have to the number of public filings that they've mentioned that they're getting involved in blockchain or they're using blockchain in their business. So we score companies based on all of their 10Ks and Qs and how much they're mentioning blockchain in the business annual reports. And then further, so actual revenue generated, are they truly generating revenue from a product, or are they just putting a product into the market at the moment? And then in some cases, it's are they a user of the technology, and how much is that going to impact their bottom line as they reduce their costs? Because again, blockchain is going to impact every sector of the economy, most likely, and I can't even think of one sector of the economy that won't have blockchain in touching it, either in a revenue increasing capacity or in a cost reducing capacity. And so then we measure that also. Is their economic impact? So how will it impact an investor or a shareholder in the company? And then we look at a few other things, such as which institutes are they members of? Because I think there's a lot of fraudsters here. A lot of people are jumping on this hype bandwagon and just saying they're involved in blockchain, but they're really not. And so we'll score companies in that. Are they part of an institute? And then what level of membership are they in that institute? And then user of the technology and developer, and then supplier. So are they a supplier of technology to the ecosystem? A lot of the chip makers are supplying chips, not only in terms of all this cryptocurrency mining, like AMD and NVIDIA and Hitachi, but also some of, like, even Intel, for example. Intel's chip is going to be used in all of the blockchain as a service use cases on the Amazon Web Servers because it's able to process encrypted transactions far better than any other chip out there. And that is potentially almost a 20% revenue bump to Intel alone just in the blockchain kind of economic scenario.
So going back to what you said about jumping on the bandwagon, it seems like recently several companies joined the wave of adding blockchain to their otherwise unrelated business models, they have faced regulatory pressure or watched investor optimism subside. What types of near-term headwinds should we keep our eyes on in this industry?
Yeah, so if you're thinking about blockchain from a technology perspective and companies that are using blockchain in their business, publicly traded, we kind of view that almost like the shallow end, where it's going to be a great opportunity to get yourself exposed, but not fully in the deep end and the highly speculative fraudsters and scamsters, as long as you do it in a meaningful way. You know, companies like IBM and Microsoft and Accenture, those are that way. But if you do want to go out on the risk curve, you should really probably focus more on the largest cryptocurrency and digital assets, and do it in a diversified fashion, because you just don't know which ones are going to get hurt. There were a lot of speculative bubbles that have existed over time. It doesn't mean that the technology goes away. It just means that you need to be careful and kind of avoid things. So we're going to see the regulators come down on frauds, and that's no different than society in general, penny stocks, everything, right? So if you commit fraud, you're in big trouble, and so if you invest in a fraud, it's probably not going to work. But in the kind of general use case, like a lot of these firms that have raised money through an ICO or some other means have done so in a almost like a regulatory fashion, like a Reg D private placement, so they're only accepting money from accredited investors, and instead of going out to the public and doing an ICO, which is a lot more dicey in terms of the speculative nature and how the SEC is going to view that. I kind of view ICO, it should really be called VCO, which is like a venture coin offering, not initial coin offering, because it really truly is venture capital type of investment. It shouldn't be thought of as just like an IPO and here's a publicly traded offering that you can buy and sell and it's going to go up tomorrow, because these are much, much longer cycle projects to invest in.
Sure. So looking toward the future, how big of a market are we actually looking at here? And is this going to be a growth driver supported by necessary change, or is the industry going to be limited by things like cost, feasibility, or any number of challenges we often see these new technologies face?
Well, it's certainly, it is so new and it's so big, like the internet. It was so hard to fathom all the different opportunities that were going to be built on top of the internet, all those kind of second layer applications. And I think the Twitter and Facebook is a great example. You could have never even dreamt of a product like that when you were still trying to figure out whether or not someone would ever give their credit card information over the internet. That was, if you think about those early days. So it's very early in the technology, and there's a lot of kind of hesitancy on the traditional incumbent space. But the cost savings is so great, and the opportunity the disruption is just so large and so significant that we're going to see some fast movers. Netflix is a great example of a company that kind of came in and completely disrupted an entire industry, and they did so with really kind of an unproven business model, mailing DVDs. But then they went and put themselves out of business all over again by doing digital streaming, and that Uber is a great example. When Uber first got started, they were illegal in every single city that they did business in, because the taxi cab cartels and all of the other industry just wasn't ready for that kind of technology. But they pushed on because it was so efficient and the user experience was so much better. And that's where we're going to see kind of in this blockchain space, this cryptocurrency space, is more and more companies that are ready to innovate are going to just step into that void and fill this need and cut out so much infrastructure and so much other costs that the regulators are going to have to open their eyes and say, we need to let this thing play out. And I think that's what's happening right now, is the regulators have been, again, they're hard on fraud, but they're letting the rest of the industry grow, just like they did with the internet in a open source world, you're far better off than you are in a closed source world. Like AOL was not a better solution than the open source internet. But there was a period there where a lot of people thought AOL and CompuServe and those companies were much, much better because they were safer and they were closed and they were, everything was verified and confirmed. But now we know that open source is far better, and that's what we'll see here with blockchain and the kind of cryptocurrency and other blockchain use cases as well.
2 key takeaways. Don't commit fraud.
Yes.
And blockchain, like infinity times potential.
Unlimited potential.
Unlimited potential with blockchain.
It's so true. The thing I didn't even mention in the use cases is this is something that I think a lot of people forget about is this ability to create smart contracts, and AXA is a good example. So when people buy flight insurance, they rarely do they claim it if they miss their flight. In a blockchain world, there's a smart contract that knows you missed your flight and pays you automatically. There's no agent, there's no person in the middle, there's no somebody sending an invoice, somebody sending a claim, completing a claim. It knows the flight was delayed or the flight, was early and you didn't make it on the flight and you get paid. And think about all that friction that's lost due to the ability to have kind of these blockchain-like solutions and micro payments and larger payments. It's really, really compelling.
It's beautiful.
That's a good word for it, is compelling. I didn't even think about the flight insurance thing.
Yeah. A compelling world, a world with much less friction, as you've said. Thank you for joining us, Eric. It was very fascinating to hear those new applications and kind of learn about this unlimited potential here with blockchain. Thank you. I think our listeners will appreciate it, and we look forward to hearing from you again soon.
All right, great. Well, thanks for having me on.